Good evening and welcome back to Be Rich. Today I wanted to talk about the way the markets have been behaving. Well, in India for the last 1 year, the markets has done practically nothing. The market has been grinding in a place between 17,500 and at 16,000. But overall, many people's portfolios have taken deep cuts. The fall of the portfolio is much higher than what the index suggests. But even so, more in the United States and the world, where the stock market is down more than 25%. A violent pullback rally was sold into when the Fed increased the rate third time. And then all the bottoms fell out. And for the last 4 or 5 days, markets have been on a free fall. This stress also compounded the things for global investors with our harebrained mini budget scheme, which put which caught the pension fund managers off guard who had taken liability products, basically derivatives, to generate higher returns for defined benefit plans and almost went into solvency issues till Bank of England entered the market to soothe nerves. The yen is at a 25-year-old low. All this was not expected by any investor. Things have only got bad to worse as the central bankers around the world have tried to stamp out inflation. Without stamping out inflation, there can be no cure, and therefore, the central banks will have to continue to increase interest rates. Today's podcast is not going to talk about what the central banks should do or should not do. The question is, how do you deal with the losses that your portfolio has to do? If many people are like me, I never see my portfolio, so I never have to worry whether I have lost money or made money. In my case, my investments in stocks are money which in long term I can afford to lose. My strategy for being safe on stocks is only putting small amounts of money every time I enter the market. So there's never been an occasion where I put a large block of money on the market together so that I worry about the results of that stock. For me, my investments have added over a long period of time whenever I have felt like putting a few thousands. Therefore, I do not worry about exactly what is my portfolio. Unfortunately, for most middle class people, it is not like that. They have their lifetime savings, and believing these newfangled financial advisors have made deep plans based on their portfolios. These portfolios have been running up for the last 5 years, and there have been two vertical drops, one when Mr. Trump was elected, another when the pandemic happened. In both cases, the actions of the central bank saved the market, and the markets rallied right back up. In fact, most people in this generation have never seen a bear market. Most of them have come after 2008 and have no idea that stocks can hurt and hurt brutally. It is right now happening in America. But in spite of such deep falls, the retail investor has not withdrawn his money in the United States. The total amount of outflow from mutual funds and other plans is only 0.4% or $80 billion. Most of the people have just held on held on to the market, held on to their positions, hoping that better times will come. The final capitulation of the market will come when these retail investors sell. Why do not retail investors sell? Retail investors do not sell because there is so much inertia. Today, IT and information technology solutions have made sure that most investments are made on autopilot. That is, you don't even know that you are investing. You have no clue where you are investing. An investment advisor has told you to do something. You are doing something, and you don't even know. that money is being invested in that particular area. So, unless there is friction, you will not know or you will not hurt, because these statements come to you either at the end of the month or at the end of the quarter, and you in your busy schedule have no time to even look at it. And at that time, when the time comes, the losses are already too heavy, and you do not want to convert your paper losses to your actual losses, because the actual losses look far better, worse than the paper losses. So, you don't want to become a real loser, and therefore you postpone your decision to sell. The other reason is a survey in Wall Street has shown that most of the time traders want to change their positions. They enter the market by putting a strict stop loss. But as the market comes down, they feel they should change the stop loss to a downward position and would drop the stop loss by 5 to 10%. This, according to that survey, has happened more 40% of the times, and traders are not able to digest and actually cut the losses. In terms of trading, this is called as kill criteria. One of the authors whom I have read with great interest is a lady called Annie Duke. Annie Duke is a professional coach and has been a champion poker player who has written a lot on decision making. So she is talking about kill criteria. She's written a latest book on how to quit. In this, she says one must have already decided when to leave the market and entered a position very clearly. If this is what is going to happen, I am going to kill my position, and do it in such a way that the decision is already made, and whatever may happen, you cannot change the kill criteria. One of the best examples of that is that Bitcoin you thought was an inflation hedge. But even with inflation raging above 5%, Bitcoin has lost more than 25%. You must have had a kill criteria that I will sell Bitcoin if it drops 25% and when inflation is above 5%, and must have exited then you would have cut your losses. Other people may have other reasons to hold Bitcoin, but if this was your kill criteria, you must have killed it. Then you will have cut your losses and still have money left to play another round. Thank you for watching. Be rich. If you like this content, subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.